Okay, back again. We're going to talk a little bit about depreciation of autos and listed property. And basically, if you pull out that uh, auto and listed property handout that I gave you, you'll see that on the very first page for business vehicles, the depreciation on those vehicles is severely limited, particularly when the gross vehicle weight ratio, GVWR, is less than 6,000 pounds. So generally speaking, a light truck, a very light pickup truck, is less than 6,000 pounds GVWR. If you buy an F-250 or a 3/4 ton truck, those get over 6,000 pounds, but generally speaking, the lighter trucks and all of your passenger vehicles are less than 6,000 pounds gross vehicle weight ratio. If that's the case, if you look at this for passenger automobiles, the maximum amount of depreciation that you can claim, if there's what they call no special depreciation. Now, I'm not going to talk too much about special depreciation because I think this is going to be the last year of that provision in the tax code, so it doesn't do us much good to talk about that for planning purposes. And if you have a vehicle that you're placing in service in the first year in 2011, you'll see that the maximum depreciation that you can take is $3,060. The second year is $4,900. Then the third year is $2,950, and every year thereafter it's $1,775. So in essence, you are depreciating it very slowly over time at $1,775. If you have a vehicle that weighs more than 6,000 pounds GVWR, you're then entitled to skip out of these rates and these restrictions because they feel, okay, you're not using that vehicle so much for personal use. I don't think you'd go out and buy a 3/4 ton truck to go commuting around with. So they're saying basically that if you have these heavy vehicles, then you don't have to worry about these limitations that are imposed. And you're also able to use Section 179. So for instance, you buy a $30,000 3/4 ton truck. Well, probably more like $40,000, 3/4 ton truck. You would then be entitled to take Section 179 on that vehicle. Okay, now they have limited that Section 179 provision on vehicles of that nature to $25,000 for things like Suburbans and other large vehicles that are over 6,000 pounds GVWR, but are still kind of subject to personal use. SUVs, big SUVs that weigh over 6,000 pounds, they say that, okay, of that 40,000, you can take 25,000 in Section 179 and then depreciate the rest. Okay, autos and listed property, just remember one thing. If it is more than 50% business use, you can take Section 179 and you can use maker's depreciation, the more rapid depreciation. If it is 50% or less, then you have to use straight line depreciation. So there's a big planning advantage for using listed property, including automobiles, more than 50% for business use. Okay, there's only about a minute left to this lecture, so I'm going to go back to the and we're going to talk about, okay, with respect to leased vehicles, there's a deduction for the rental payments, but they have to be reduced to reflect the depreciation on the autos. I wouldn't worry too much about that. I think when a business leases a vehicle and it allows the person to use that vehicle for personal use, there's some restrictions that we have to apply. Okay, we are in our next segment going to talk about amortization, okay, and intangibles. Okay, very briefly talk about that. Okay, and I will end this